Welcome to the Scalable Real Estate Investing Podcast, where we discuss the most scalable strategies, tools, and approaches to successfully invest in real estate. Learn how to make the most impact of your time, automate your real estate investing business, find off-market deals with minimum time invested, and leverage your capital to create as many income streams as possible so that you can achieve true financial independence. Thank you for tuning in. I'm your host, Mason Clement. Hi everyone, Mason Clement here. Before we get into today's episode, I wanted to ask you one question. Are you sick of the wild swings in the stock market and ready to try something different? Did you know that investing in stocks actually put you at the very bottom of a company's capital structure, meaning that there's practically 0% chance that you're going to get any of your money back in the event that the company files bankruptcy? So basically, you're putting yourself in the riskiest position for a questionable return. Personally, I hate the unpredictability and just waking up and having half of my investment gone when I didn't do anything wrong. So what a lot of people don't know is that you can actually make higher returns on a consistent basis by investing in the opposite end of the capital structure, which is actually the safest place to be, which is on the debt side in a first lien position. And you can do that by investing in real estate, and specifically investing with my company in notes that are backed by the land that we purchase. So if you're ready to diversify your income stream, go ahead and go over to scalablerei.com and click on invest in the top right corner. There you're going to find a form that you can fill out to determine if you're eligible to invest with my company, Celion Capital, and we'll be reaching out to you to schedule an introductory call and speak more from there. So thanks a lot, and let's jump into the episode. Hi, Scalable Investors. Thanks for tuning in to another episode of Scalable Real Estate Investing. I'm your host, Mason Clement, and today we got Pete Reese with us, who is a longtime veteran, been in real estate since 2000, and he's the president of Reelvest Properties, primarily focusing on land development and investing. So really excited to have him on. Always looking to get more lands folks on here, being a land investor myself. So I think we have a lot to unpack. I guess the biggest highlight that I want to talk to him about is how he made $4 million this year with his business. So, and one last fun fact that you mentioned in your bio, 31st great grandson of King Henry II. So I thought that was a very funny fact that we could maybe talk about as well. So before
I need to put that on my Instagram bio.
You should LinkedIn or something. Why aren't you in London right now? And
I don't know, and I visited his castle, and at the time when I visited the castle, I had no idea that I was related to this guy. So my daughter actually figured it out because on ancestry.com you can keep following the clues all the way back, and it kept following all the clues all the way back, and that's what it showed. So craziness.
Okay. Yeah, I need to do that myself. I mean, I could be related to George Washington or Thomas Jefferson.
Who knows? You got to get in there.
Yeah. Or maybe just a boring family tree. We'll see.
Yeah.
It is funny, though. My last name, Clement with a K, is Austrian. With a C, it's British. Although one of my aunts did an ancestry thing, and apparently we had a lot more British than expected. We thought we had more German, Austrian stuff. But anyway.
Yeah, it's all a big surprise when those things come back. I had no idea on some stuff too.
Yeah. Well, one last thing on that. It's funny, growing up in Texas, it seems like everyone has a little bit of Native American in them, whether it's true or not. I'm part Cherokee or 2% or whatever. It's like, how do you know? That was way before Ancestry. I was like, no, you just make that up.
Yeah, really.
But maybe some people were true, right?
Maybe.
But all right, before we ramble on too much longer, what I like to do is have each guest talk about their background and their real estate journey, in case the listeners aren't familiar with you. And obviously, it's just fun to hear a story. So why don't we just unpack your story, Pete?
Sure. Well, here's my story. It started in the year 2000, and it was much like many other people in that it started when we bought our first home. When I say we, my wife and I, Heather, were kind of a team. So we bought our first home, and that got us kind of hooked in real estate in a way, because we held it for 2 years and then we sold it in order to kind of buy a better house, and we got made a $50,000 profit without really doing too much. We did some minor improvements to the home and some kind of DIY subpar improvements that I did on my own. And so we ended up with $50,000, which at the time was a really big chunk of change for us. Bought another home that was a fixer, fixed that up some, made some even more money. Then we got into flipping homes full time. That was kind of our money making thing for a while until the market crashed here and about the year 2007. And previously, I'd gotten my real estate broker's license because I was, I felt it was better to get a lot of the deals. I was getting most of my deals off of the MLS, but it was a lot easier to go see the properties. I could show them myself. I could actually get that commission on the buy side. So I'd got my license. And then when the market crashed, I was kind of like, well, what do I do now? I was like too scared to do flipping because it was, even though there was a lot of activity, there weren't really a lot of end buyers at that point. You could buy to rent things out and have kind of a longer term perspective, but flipping them was a little dicey at that point. So I got really heavily involved in listing REO properties for banks. And that was my thing for a number of years. And that really kept things going well for us, even during the biggest real estate crash ever. So I was thankful for that, but it's not a real business that I wanted to be in long term. It was kind of a temporary solution to, needed to make money in some way. Also got into, after that, got heavily involved into short sales, being a short sale listing broker. So I helped people kind of work out short sales with their banks. And that was a little better. That was a little more fulfilling because the sellers were generally on, the sellers wanted to be on board with that and work some sort of solution out. So I felt like I was helping it in a little bit of a way. Ended up getting connected with a bunch of larger investment companies at that point. So for a while there, I just was finding deals for them on the MLS and some off the MLS, but was making a good living just, digging up deals for them because I knew what they wanted. And I had some good connections to get them deals. And so that was kind of what I did for a little while. Briefly got into selling luxury homes because I thought that's what I wanted to do. But I realized that was kind of more of a pain than I wanted to deal with. And then take a whole sidetrack with the business with my wife, training for bloggers, travel blogging and lifestyle blogging, all different forms of it really. But it was a whole training business around that. So we did really well with that. And we were traveling, the world for quite some time for about 5 years straight. We were traveling 150 days out of the year with our family of 5. So all the time, many travel blogging trips. It was a great experience. But I got the itch to get back into real estate investing and real estate overall and read some stuff online about land investing and kind of went down the whole rabbit hole. And then I just kind of went all in and sent out my first batch of mail in December of 2020. 10,000 letters was my first batch of mail. And then the first property we resold was in March of 2021. And that in 2021, we did about 1.2 million in revenue at about 50% gross profit margin. And then 2022, hopefully on track to do close to 4 million. It just depends what closes on time. And roughly about 50% gross profit margin as well. So real happy with the way things are going, and next year projecting quite a bit more than that.
Okay, that's funny. I had sent my first mailer out at that time as well, because it's been 2 years for me focused on land.
Yeah.
I did not make 1.2 million though. So how did you do that? There's a lot of different strategies within land that people probably don't realize. So how were you able to reach that amount?
Yeah, well, here's my basic model, and I know there's many ways to land invest, and everyone's got their own kind of take on things. Basically, what I do is I look for properties for the most part. Most of them now, at least, are at least 10 acres, and in markets where I know I can sell things quickly. I'm looking, my average hold time is about 60 days. So I buy and resell. I don't do note financing or anything like that. So I just buy at a aggressive enough price where then I can resell it at an aggressive price. So I get the resale right away. I use listing brokers to resell the properties for me. I don't do any of that myself. So that takes a lot of complexity out of the situation for me. And I also kind of leverage them a lot. the brokers in order to give us opinions on the properties before we actually buy them, kind of as part of our due diligence process. And then we use them to relist the property for us as well. So, and then the other big key is just sending out like a ton of mail. I mean, a lot of mail. Right now I'm doing 50,000 letters a month I send out. And I had months this year where I sent out 100,000 letters, but I scaled that back a little bit, trying to be a little more targeted on my lists instead. So I kind of chopped that down, and it's working out really well doing that. So.
Okay. So for me, I had a minimum amount of profit that I need to make on each deal, and that kind of determines the expected retail value of each property that I'm mailing. So if it's a market that I feel like, maybe I can only sell these for whatever it is, 10,000 or 20,000. I'm trying to make 30,000 on each deal. Obviously, I couldn't make 30,000 on that deal because I can't even sell it for 30,000. So
Right.
How do you select the markets besides just knowing you could sell within 60 days?
Right.
And it's got to be at least 10 acres. So
Right.
what's like your minimum profit per deal and expected retail value?
Yeah, I'd say I always try to double. I always try to do, double our money. And on average, our profit this year so far is 22,000 per deal. So it depends. You've got some properties that do so well, and then other properties where you're just, I haven't lost money yet in about 100 deals. The lowest, but I've had a couple that were just over break even, like $500 profit or something like that. But my philosophy is that, the winners are going to bring in the big profits, and then you're obviously going to have a lot of singles and doubles and things like that. But then the losers, the properties that just don't work out for whatever reason, as long as you don't lose money on them, then you're doing well. So I think it's just a matter of like I'm trying to just kind of step up more and more on the purchase prices. Like I'm looking for things like at this point, I don't really look at anything below like a $20,000 purchase price where I anticipate that I'm going to double our money. And then, I try to, but it goes all the way up. I mean, I've got some larger deals. We just bought one that was 360,000. I've got another one under contract that I'm buying for 450,000. Those larger deals I'm taking on partners, not funding them all myself. But for the most part, I mean, at this point, I've only done 3 partner deals. Everything else has been just funded ourselves with cash. But I think the main thing is to kind of, even though some of those properties that are like 5 to 7,000, and you can, you think you can make 20,000 off of it or something like that, those are very appealing, and they do, it's not that hard to do those deals really. There's a lot of them around, it seems like, but it's just, I don't know. It's hard to get to the bigger numbers that way. I think that's why that's kind of why I've trying to focus on the bigger and bigger deals. So I guess the main sweet spot right now is I like stuff in the, the purchase price range of like $30,000 to $70,000. That seems like a really good range right now that's working pretty well.
Okay. Yeah, it's funny you mentioned that. Just to add to that, in terms of doing a bunch of small deals, I just realized in my business I was doing that. And initially the first year, I just want to get as many reps in as possible to build my confidence level and experience, because I didn't have, that track record that you did of just being involved in real estate for so many years and just kind of understanding how the universe of real estate investing works per se. So that's why I didn't mind doing deals where I was making $2,000 here and there, but then I ratcheted it up to at least 10,000 per deal. But now it's like, no, I really need to be very strict and do at least 20 or 30, because the opportunity cost is actually killing my business, like by wasting so much time on these smaller deals. And also just watching a football game yesterday, Raiders Rams, and it wasn't necessarily a field goal game. It was a low scoring game, but I was just thinking, reflecting on my business, and doing those small deals is like kicking a bunch of field goals. Like you're not going to win the game by, I mean, sometimes you win games by kicking a bunch of field goals, but it's just slow going. You might as well score a whole bunch of touchdowns back to back and try to get like 100 points in the game, right? Make it look like a basketball game.
For sure. Yeah. And I'm more aggressive that way, I guess you could say. I mean, I like I definitely at the beginning, like the smaller deals, like you're saying, are really good validation for the model. And it's kind of hard to pass up when you buy something for 7,000 and sell it for 20,000, 25,000. I mean, that's, that's pretty cool. But I've realized, and I've known this for quite some time in the real estate business, it's a weird thing that the cheaper the property, the more problems you're going to have, the more of the pain in the ass it's going to be. Pardon my French, but it's just, it's this, even with homes, like, single family homes. If I was an agent, and wanted to get back into that type of thing, I definitely would not focus on the lower end homes, because you're going to have so many problems. You're dealing with unsophisticated buyers that, create issues that don't need to be issues. And plus they're crappier properties, really. in general. There's normally something wrong with them in some way.
Yeah, it's funny. I've had a lot of sellers wondering, why is it taking so long to close? And I'm like, well, because your spouse is deceased and you didn't have a probate or a will, and I have to make sure I'm buying 100% of the equity. And this whole concept of like, oh, you only own 50%, it doesn't automatically pass unless you got that tenant's right or survivorship. And anyway, yeah, it's just like
Yeah.
little things like that. Oh, it's just a piece of dirt, pay me my money.
I
Like,
know.
no.
I know. And I guess another thing, I mean, really thinking about this and like how to scale faster, get higher dollar amounts. I mean, I've really focused on building a team around me that kind of takes the friction out of the process, because before, at the beginning, it was just me and a VA an assistant that had been with me for a while in another business. And, there was a limited amount that I could do by myself, kind of. So I built a whole team around me, kind of doing all the major things that need to be done in this business. And I'm just kind of doing the higher level stuff, like making sure the team functions well together, also approving deals, approving purchases, and kind of reviewing due diligence. And then also on the other side of things, I like to do we use brokers to resell the properties for us, but I like to do the negotiations when offers come in. And I feel that's kind of my strong point. And I like doing that. So
Okay.
that's what I think.
Yeah, that makes a lot of sense. So on your current team, how large is that? How many folks do you have working with you?
Okay. Well, I've got a lead manager who is also responsible for ordering a lot of the due diligence after we get a property under contract. But his title is lead manager. And basically, when something comes in, we use a call service. Pat Live is the call service we use. But anyhow, they take the calls, and then they come in the form of email. And then they also, we get recordings of the voices directly in our CRM. But then he loads basic information about the properties. He pulls up a map right length and a link, and does some basic stuff like, percentage of wetlands and FEMA flood zone and topography, some basic things like that. And in our CRM, I've got some automations that kick in, like we send them a text and say, hey, we've got your record. We're going to get back to you. You'll be receiving a call from this number. And basically, I've got an acquisition manager, and her job is to basically make contact with all these seller leads that come in, whether that be on the phone. We try to connect on the phone, but some people, they don't want to connect on the phone, and we just connect by email or text or whatever the deal is, or mail. And then, so her job is to get it to the point where it's actually a signed contract. And then I've got another team member that is a property analyst, and he's really excellent with reviewing all these properties as they come in. Like, is this a property we want to pursue? How are we on our offer price? Do we need to adjust it lower, or could we go up higher if we needed to? Kind of digging into all those different things. And then he also reviews due diligence as that comes in as well. Then I've got a team member who is a transaction manager. She handles all the transaction stuff on the purchase side and on the resale side. And I've got another team member who actually does compiling lists for us, and then also kind of does some miscellaneous tech stuff and make sure our CRM is working the way it should. So
Okay. So when you were first starting out, you had one VA. What was that person doing?
Yeah, he's the lead manager role that we've got now. So he was doing kind of that side of things. He was doing the, managing the leads, and he was also doing some of the due diligence stuff like we do now. But his role has expanded a little bit over time. Like I've given him more due diligence stuff, and then I was pretty much doing everything else. So it was, it was a lot of work, and hard to do everything basically. So
Yeah, yeah, it's definitely the struggle that I have in my business, and I I feel like hiring virtual assistants, it seems like something so easy to do on paper, but it's one of the most difficult things, one of the biggest challenges I've had, and finding consistent people that actually work. And finally, I have one full-time person who's been with me since July that I don't want to fire, because usually after a few months, it's like, whether or not that person is
right.
taking away value or adding value to your business. And right now, I just have him on SMS campaigns. So that's another question I have. Do you use SMS or do you just send him mailers?
Yeah, I'm just doing mailers right now. I'm
Okay.
considering getting into SMS, but one thing that's always, kind of held me back from that is kind of the legality side of things. I just don't know enough about it. And I hear certain things like, oh, that can get you into trouble or whatever. I just need to research it more. And I know that the cost per contract is probably quite a bit less going that route. And that's why I may add it onto, my repertoire at some point. So I'm averaging about it costs me right now about $3,000 per deal for for direct mail, which I know some people are getting better numbers and everything, but I do more of a less of a targeted list, I guess you could say. I'm not just sending out of state owners or something like that. I'm doing pretty much everyone that's got like a property 10 acres plus in all these areas. Uh so yeah, that's kind of my thing. But I know that there's a potential to really enhance our business, by adding in some SMS in some way.
Okay. Yeah, I mean, it's not a big deal. I mean, obviously, it depends how you look at it. Some people, their entire business is running on that, which is great. And some people, they have a lot of success with PPC, which is its own animal. But looking back at the deals I've done so far, I've found that probably 80% or more come through my mailers. And that's why I've actually been really trying to get on myself about being more consistent and sending out those mailers. And I think the best way to be the most consistent would be having someone do it for me, obviously. But at this time, maybe we'll just talk offline about it. But or maybe we could break it out now. Like my struggle has been like just running into a lot of different bottlenecks in pricing the list, because I just get kind of analysis paralysis. Like my background's in kind of financial analysis and building models in Excel, and like just overanalyzing stuff. Like, is this really a comp? And like, well, oh, what was the days on market? Did it have any structures and all this different stuff? And it's tough. And so like finally right now, I'm trying to focus on just specific subdivisions, because that will at least contain the standard deviation you have and all the different prices. Even then, though, obviously it's not perfect. If you have various rapid changing in elevation, one lot could sell for 30, and the next one next to it sells for 60 because it's got a better view. But anyway, how have you, in your experience, streamlined your process of pricing lists and then like teach that to one of your team members?
Yeah, you're way more advanced than me on that kind of stuff. I honestly, what I'll do is I'll look at just kind of general averages for a particular county in most cases, and I'll average it out. Say it's the average sale prices, from what I'm seeing is for a standard property would be 3,000 an acre. Then I just put it on the offer, you know 1,200 or something, somewhere in that range, 1,200 per acre, and generator offers that way. I don't, and I know we're going to be off on a lot of deals, and it happens that way. Sometimes we're too low, sometimes we're too high, sometimes we're right on. But I think the important thing is getting out there and getting the conversation started. And it's not, I could definitely be bogged down and spending a lot more time on pricing, but what I've been doing works. So I'm not sweating it really. I've done the PR priced or whatever it's called, and my results are not nearly as good. It seemed like it was way off compared to what my normal my normal responses and our normal results were. So I just went back to doing that. And what I do is we use data tree for lists, but it's, what do we do? I just list out the counties, kind of do the schedule ahead of time, like which counties we're going to send in a particular mailer. And I do two separate mailers each month, 25,000 each mailer. And so I list out those counties, have my one of our team members pull the list, and then scrub the list based off of the criteria we give them. And then I just price it. They prepare the spreadsheet for me and everything, and then I send it off to Rocket Print. So I really don't spend. I used to spend a lot more time on pricing. I used to try to get a little more granular, but it's not even. I didn't notice any real change in results when I did that, and so I don't sweat it too much anymore.
Okay. Yeah, that makes a lot of sense, because even if you get it, like you overpriced it, or what mainly that's the biggest fear, right? Is overpricing it. I sent some mailers out earlier this year, and they were like at or above the retail value, because it was a new market for me and I didn't know. I thought I had done my analysis correctly, but I mean, worst case scenario, that happens, but then you just renegotiate the price after gathering information about the property, right? And
it's just giving people a reason, like, oh, we were too high on this one because we didn't realize that it had such little road frontage, or didn't realize that it was all in the FEMA flood zone, or we didn't realize it had so much wetlands. Like, as long as you give them a reason and you say, here's what I can do. If they want to sell, and these are the only people that I really work with, the people that are like motivated and ready to sell, hopefully you can work out a deal with them. It's rare that they're like so offended they're just going to hang up the phone on you or something like that. But it's just, as long as you can give them a reason, some sort of justification, then you could typically get past that.
Yeah, I would usually say, oh, our research team, applied a price per acre across the entire county and didn't realize that these properties in the specific community are selling for different prices, but that probably threw us under the bus a little more than necessary. So I like your approach a lot better in terms of road frontage.
And we say, like, Harry, our offer prices are based off of general averages for your area, and if you get in this conversation where they're like, well, this is way too low or whatever, your property is a really nice property. Hopefully I can come up, what would it take to put a deal together, that type of thing. And then they'll give you a number and you try to negotiate something out. So if you're too low, that's the conversation. And if you're too high, you give them the reasons why you were too high. And, either you'll work something out or you won't. But it does help that I don't have to have those conversations myself on the phone anymore. I mean, I'm fine on the phone. I used to be on the phone all the time, and I don't really mind it in a way. It's very time consuming, I guess you could say. So I love having the acquisition manager that's responsible for all those conversations, and I take myself out of that completely.
Yeah, I think that's honestly been something holding me back, is what if I get all these different leads and I lose those opportunities because I'm trying to answer the phone and
right,
just doesn't make sense. But I did want to ask you, do you feel like you'll lose any leads using Pat Live?
Yeah, I mean, I'll tell you what, Pat Live is, there's some reps. It just depends who the rep is. Some of the reps are great. Some of them are, maybe it's their first day or something like that. But we do try to do, because I have my acquisition manager working, regular business hours, Monday through Friday. So if it is, they go through a little questionnaire, a little script. And if it's someone that is interested in selling, they attempt to do a live transfer to my acquisition manager. So if it's outside of business hours, then obviously they just take a message. But I don't feel like we lose a lot now. I mean, we try to be really on top of it and getting back to them right away if they have to leave a message in one way or another. Obviously, if it's after business hours, it's not going to be till the next day. But I don't think we lose. I'm sure there are some, but like if I was answering, like if I had everything forwarded into my cell phone and just answering my cell phone stuff, I know I could, convert a lot more, but it's unsustainable. So
yeah, I remember one of my first mailers I sent out, I had overpriced it, and it was funny. It was like a busted community that was created in the 80s, and these people had held it since the 80s, and like, well, no one's contacted me for 40 years. Hell yeah, I'm gonna sell it. And so I would get like 20, 30 calls every single day. I was like, my mind was like just getting crushed. So I totally understand what you're saying.
Yeah,
And
yeah. And you
yeah.
know what? It's a weird thing too, because if you're kind of detached from having that conversation with the property owners themselves, you can be more analytical and less interested in like appeasing whatever they have to say. And it's just more about it's just more about the numbers. Like, this is what would work, and hopefully you can work out a deal, and it's less emotional. And it's just business then. So
Yeah, that's actually a really good point too, because it's actually a weakness of mine, maybe a weakness of anyone that's a normal human. Just kind of building that relationship and like kind of
yeah,
wanting to help the guy out and like, oh
right.
man, hear your story, and yeah, I should pay you a higher price and kill my
I,
profit.
I've found myself doing that at the beginning. I mean, it is human nature. You want to be nice to people, and you want to do whatever you can. You're like, oh, I can still make a good profit margin or whatever. But really, you get yourself into trouble when you do that kind of stuff. And as a business person, it's about business, and you got to look out for your business and the people on your team and your family and everyone you're supporting as a result of it. So I think your job is more to just do what's best for you, and then they can decide whether it works for them or not.
Definitely. And to bring it back to football again, I was thinking, because you look at the defense, like really aggressive defense players, they'll actually try to rip the ball out of the person's hands. And you think at first, that's really unethical. That's fucked up, man. Like, why would he do that? But at the same time, it's like, no, that's what you got to do to change the game. Like, you can change the whole thing if they recover a fumble and get some random touchdowns. The defense is scoring for you now. So
Yeah, for
it's the
sure.
same. You got to do the best thing for your team, right? And obviously,
Yep.
some coaches are probably really motivating their defense players to do exactly that. So
Yep.
yeah,
Yeah, that's a good analogy. It really is. I mean, you gotta look out for yourself in business, because believe me, everyone else has their own best interest in mind. So it's the only way to really do it. I mean, you could obviously run an ethical business and do run the best possible business you can, but ultimately it's about business, and it's about making money, and you have to keep that forefront for sure.
yeah, and I think part of the reason I like to just draw these analogies and comparisons is because it is all just a game. I mean, we're not trying to like just obviously decapitate people. We're still paying them a reasonable amount of money, whatever. But just like you said, you have to look out for your own business, because if you don't, then people are gonna walk all over you, and then you're out of business.
Yeah,
So
for sure. For sure. It'll be a short-lived business.
yeah, exactly. You might feel good in the short term, but you're gonna feel a
Yeah.
lot worse in the back end long term.
Yeah.
So are you doing any subdivides or land entitlements, or just simple flips basically?
We do quite a bit of kind of minor value add stuff. Like, we'll do some clearing of paths sometimes. We'll do perk tests quite frequently. Uh, every once in a while, we'll do a survey. We've done a couple of minor subdivisions, 5 lots or less in these areas, and also I've done some commercial type stuff where it's a major subdivision type property, but we don't we don't go through all the steps to do that, but we'll hire an engineer to kind of draw up potentially what it could be based off of the zoning and the utilities and everything that's there. And then we use that in the marketing to resell the property, like list it with a commercial broker. And just doing that step generally creates a lot of value in itself.
And are those ones that are already zoned commercial, or do you actually rezone it as well to commercial?
Well, I've done that with a few properties that I can think off the top of my head, but they were one in particular. It was just it was within the city, a large city, but it was a perfect. It was on the outskirts, kind of the suburbs, but within the city limits, and it had all the utilities, sewer, water, everything, and it was zoned a particular zoning which allowed 9,000 square foot, lot sizes, and it was like a 20-acre property. So on that one, it was just a big piece of land with the right zoning and utilities there. And it had, multiple access points and everything you look for a big subdivision. And then I sent that one to the engineer. I think it cost me like $1,500. and he just drew up what they call a sketch plan. And basically it was like a what a subdivision would look like with all the roads drawn in, all the individual lots drawn in there. And then we use that to basically send to give to the commercial broker, who then used that in his marketing, was able to say, okay, here's 30 some lot potential subdivision, and then marked it up for quite a bit higher. So it just created maybe some perceived value in the property, in that, we looked at it, we made all the calls, we did all the stuff that we knew how to do to kind of see if that's a viable subdivision property. And then we had the engineer, drop the sketch for it. And so, a lot of these builders or developers, they're going to have their own people do their subdivision. They might have a different plan, the way they want it to look or whatever, but at least it shows them that there's some potential there, and it maybe makes them, look twice at it.
Yeah, that's a really good idea, but it also avoids the requirement of investing like 50 or 100,000 in soft costs to do all of
Right.
those tests for due diligence, and then the long lead time to bring it through the entitlement process to sell them as paper lots. So you're not really going through that whole process. Is that correct?
Right. I haven't yet. I've thought about it. I've got a property now, which I was going to do it, and then I kind of talked myself out of it, and I'm just kind of doing that same thing with it. You can sell it for more if you get it fully entitled, I think.
Mhm.
But in most cases, I believe. But I think that plan, with the sketch plan and everything, I think that's kind of a good happy medium in a way. So
Yeah. Okay.
less time. I like quicker stuff, like that's the thing that bugs me most about those things. Like it would just take a lot of time, and then, you got to invest 50 grand more in it, or 100,000, who knows what you have to actually invest in to get it to an approved paper subdivision. But, you can create more value that way, but it's just more time. And my business is more about the quicker stuff, really.
Yeah, I mean, it's a different ball game. I mean, one deal has to make at least $1 million
Right.
on those types of deals,
Yeah.
So when you get a handful of them in 1 year, then you're looking pretty good. And then my
Yeah.
concept's always been, at the same time, you have your simple flips running in the background at all times as like the foundation to the business, and then you add the icing to the cake with the entitlements and stuff. But you gotta have a team like you have.
Yeah, and that's why the thing I want to get into next, honestly, is our solar farms. And I kind of view that in a similar way. Those take a long time to get approved. A lot of these, if larger solar farms, they might take 2 to 4 years in order to get fully approved. But there's so much money going into that side of things. Like they want to make most of the grid in the United States convert it to renewable energy by 2035. And there's tons of government incentives, both federally and locally, for, tax credits and tax incentives and things, that it's just obvious to me that that's where things are going. And the panels are getting cheaper and more efficient. And it's just kind of at this point, it's a really viable business. That the whole logjam is really getting those things connected to the grids. But if you can get the projects fully approved and entitled, then there's many entities that are lining up ready to either complete the project and get it done, and and just buy it off you at that point, or you can complete it yourself and then sell it at that point. And there's so many end buyers out there that they'll pay a real premium for them as well. Institutional type, investors and money and everything.
Because then the institutional buyer can just hold on to the asset and be selling that energy. Is that correct?
Yeah, it's like a mini power plant. They're connected to the grid, and then the utility works out some sort of deal with the solar farm where they're paying them X amount of dollars per kilowatt, and it's just income coming in and very little maintenance. These projects are supposed to be there, 20, 30 years or whatever. I mean, I know a lot of landowners are, sometimes they'll look at leasing their property to a solar developer. But my idea and my thoughts, or what I want to go towards, is actually, not leasing the properties that I own to a solar developer, but being the solar developer ourselves, like contacting the engineering companies that can get all this done, I'll just pay them to do that. And then we either sell the project when that's ready to go, or we get the project financed and get it built and then sell it at that point, or just hold on to it. But from what I hear from in the industry, that it's just like you can get such a premium for those things right now that it really financially doesn't make a lot of sense to actually hold them at this point. It's like better to just move on from them and take your home run at that point. But
Okay. Yeah, that's really interesting. That opens my mind. And it reminds me of a podcast episode I listened to on someone else's podcast. I can't remember, but the guest speaker had created a website that's specifically geared toward landowners monetizing their land through things like that, like leasing to solar farm developers and stuff like that. But a solar farm, it actually requires like a full entitlement process as well.
yeah, there's a whole process to go through. The big thing is like the connecting to the grid, and you've got to make sure there's a number of criteria, but the closer you are to those huge transmission lines, we see on the satellite images a lot, the better. And you have to be a certain amount of distance away from an electrical substation as well. I think it's 2 miles or something like that, like within 2 miles. But if you've got one of those properties that's got those huge transmission lines on them, they may be valuable as a solar development.
So if it's like really rural, which is like maybe what I think of when I'm thinking like live off the grid and stuff, it maybe not as much of a value add because it's costing more to just distribute that electricity to communities.
Yeah, like they need to be somewhat close to a substation, because I think that the problem is that it loses, there's a certain percentage that gets lost the longer that it travels, the electricity. So I think that's I'm not an engineer, but that's just kind of what I've heard about that. So that's why they're only looking for stuff, they're looking for areas that obviously have a lot of sun, parts of the United States that are full sun most of the year. And then also got to be close to those transmission lines. And you've also got to, the problem is too, that some of these, utilities or certain areas have like a moratorium on connecting to the grid because they need to build out their capacity more and things. So there's a lot of variables that go into it. But just like if you were going to develop a residential subdivision, there's developers that specialize, there's engineering companies that specialize in just developing those projects, the renewable energy type projects, and hire them, and probably you'll get a whole big education about, is your property viable? Or if not, like what other properties should I be looking at that may be viable for a project like this?
Okay, so nothing in the Seattle area where it rains a lot.
Maybe wind. Do you guys get wind up there? Yeah.
I don't know.
That might be a lot bigger.
I've honestly never been up there. I live in Texas. So I just
I've
heard that it always rains. Yeah. Yeah. I've also heard like the suicide rate is higher up there because it's just always kind of a dreary feeling. I don't know. I'm just speaking on generalities. I hope not.
I talked to a guy that just, I'm in Southern California, so it's like sunny here all the time. But I talked to a guy that moved from up that way, and he was telling me, it really is like that. He's like, people walk around in this kind of like haze, and it's just a weird thing that you can't really put your finger on it, but it's different. It's different when you're in an area that's sunnier. It's like seasonal affective disorder. I don't know if you've ever heard of that, but it's kind of a thing where if you're in the wintertime, people get it a lot because they don't get a lot of sun, and they go into this like mini depression type things because they're not getting out there and getting in the sun. But so I think it's real. Definitely. I feel that way when I'm getting less sun for sure. So
yeah, it's something to keep in mind. There was something too about before I left the day job, I was told by a coworker that the average office worker sees like, I don't know, it was like less than 1 hour of sunlight per day. If you drive to work and it's dark, and you drive home and it's dark, and you're inside all day.
It's this wintertime, and I know we're getting close to the shortest day of the year right now, so it's a little bit tough. But that's why my wife and we always make it a part of our every single day. We go out for an hour walk, and it's just it's great being outside. And if you don't set aside that time for that, sometimes it just kind of gets, it's like you find yourself inside all day for, either at the office or just working at home or whatever. It's just nuts.
Yeah, yeah, definitely. Yeah, it's stir crazy. It's always working from home too, so it's really good to get out. I
Yeah.
agree. So on the properties you're targeting, I know it's at least 10 acres, so there's not a lot of infill lots that are 10 acres. So are you primarily focused on ETJ and rural areas, or do you also
Yeah.
do stuff inside city limits?
I initially didn't have that criteria, the 10-acre thing, and I was doing smaller lots. I mean, the smallest I've done is a 2-acre lot. So I was never going for this like quarter acre, half acre lots, even though I know that those can be profitable for sure. I just, I don't know. I just feel like it's easier to make a mistake on a property like that, I guess. And you got to be real careful. Any of the more problem properties I've had, it's because of buildability issues or maybe a septic thing or something like that. So I like to be in properties where I know that there is a more than one exit plan. Like, yes, we try to make sure everything's buildable. At least, you know, we determine whether it's buildable during the due diligence phase, or at least what we think it's buildable. And then, obviously, if it's not buildable for some reason or whatever, it could still be used as a recreational property. So I like having those dual exit plans. I just feel like it's a little bit safer. And that's why I've skewed towards that. I know a lot of people make a lot of money on those infill lots, but it's just not something that resonates with me as much, I guess you could say.
Okay. Yeah, and I've learned that there's the rural infill lots, so just not exactly in when I think of infill, it's like in the city,
Yeah.
but there's still this kind of like this rural, and then there's the urban infill lots, and like the urban ones where it's like really dead center in the definitely city. Those I just felt at least like some markets I worked in Florida, it's just hyper competitive. I'm grinding it out, I'm making $1,000. It's like
Yeah.
that was a huge waste of time. And
Yeah.
then
Yeah.
I sometimes I
Seriously.
can't find a buyer. I got to JV it and I make $500. I'm like,
Yeah.
no, it's
I know.
horrible.
Yeah.
Actually, it's not like 500, but it's like, oh, I would have made 2,000, but I'll give half the profit. So 1,000, even 2,000 is tough to swallow, but especially for
Yeah.
the amount
It
of work that
is.
goes into it, because they get pummeled with like 20 offers a day from these other folks trying to make a
Yeah.
start in wholesaling. So
Yeah.
yeah. So one thing too I wanted to ask was a couple more things, but next thing is taxes. So that's the only problem I don't like about land. You can't depreciate it, and obviously it's not cash flowing unless you lease out billboard or whatever solar farm. But what do you do for your taxes to mitigate that?
It's all about accelerated depreciation. So you need to be setting aside money where you can start accumulating, rental properties in some way, whether that's commercial or duplexes, fourplexes, something like that, or Airbnbs even. So you can use that accelerated depreciation to offset your tax liability. So that's what I do. So I bought a
Hmm.
motel last year, actually, and this year we're buying some other rental properties and trying to get them closed before the end of the year. And then obviously there's Section 179, which you can do as well. But you have to be fine with like buying a new car every couple of years or whatever as well. Um, so yeah, those are the main things, I guess.
You're the first person. I'm not a tax expert, so you're the first person I've heard say Section 179. What
Oh,
is that exactly?
yeah, you can buy a car as long as it's over 6,000 gross vehicle weight, GVWR, whatever it is. But anyhow, like you could buy like a lot of the Teslas and things like that are over 6,000 pounds, or SUVs. And then you can, as long as it's 100% business use, you can write off that whole amount as a tax deduction in the first year. So even if you finance it, say I go out and buy $100,000 car, and if take a loan, 0% down or whatever, and then you get to use that $100,000 write off as long as you're using it 100% for business. And if it's 75% business, then you would just be able to write off 75% of that. So people do airplanes and jets that way. There's business equipment, a lot of different things. I've thought about before, like, well, maybe I should just buy all the equipment to do the mailing ourselves. So we spend so much money in mail. and I could just buy this equipment and then use it as a, you know, Section 179 write-off. But I don't really want to get in the mailing business.
That reminds me of the scene from Catch Me If You Can, where Frank Abagnale's in the big check printing factory in France.
Yeah. I
Yeah,
know. I
that's
know.
what
I
I
mean,
meant.
I know you could buy the stuff that, print all the major printers and the stuffs the envelopes for you and all this kind of stuff. But I don't know. I'm fine with farming that out. It just seems like too much.
Oh yeah, yeah. I had this idea earlier a few months ago about I hand wrote a letter, and then the merge fields I would manually write in just like a reference number and the first name, right?
Hmm.
And then so I scanned that, I printed that, so it is a handwritten letter every single time. And so I stuffed the envelopes and put the stamps on, and after 100 of them, I was like,
Oh,
this
it's
this
just
is crazy.
no way. It'd take you forever.
Yeah.
I mean, your time is better spent, trying to work deals and, so much better spent. I mean, like if you really broke it down, like if you were actually just stuffing envelopes and things the whole time, it would just be, you'd really have a hard time getting anywhere.
Yeah, I mean, it's really an entire other business, and that's why you should farm it out unless you're really wanting to start that kind of business.
Right.
It's because you really need to hire people. Like, um, I don't know. I'm thinking about labor laws. I don't know if you can hire. Really, all it takes is like 5-year-olds to stuff as envelopes. You can't
Yeah.
do child labor, or whatever.
Child
But
labor. Yeah.
yeah, but
I've had my
somehow
kids,
find cheap enough.
I've done a lot of direct mail over the years when I was, especially when I was trying to break into the, luxury home market, when I was doing a lot of short sales. So I was doing a lot of direct mail then, and I hired someone to handwrite all the envelopes. And, there was less leads than what we're doing now. Like I'm sending out 50,000 letters a month. There'd be no way to get to that volume unless you really have a big staff of people doing all this stuff. But I've had my kids stuffing envelopes, and they have vivid memories of all this stuff. So it's fun teaching them a little hard work, but I don't know that I can keep them employed doing it too long. So
Yeah, yeah, definitely done a couple of mailers as well. In a past life, I was buying bankruptcy claims, so unsecured pieces of paper. Same thing though, you're sourcing off-market leads and basically mailing creditors in bankruptcy cases with this, its own copy. Say, hey, I want to buy your claim for X pennies on the dollars, or what. So I remember me and my wife one time we were doing a mailer like that. I forget how many we actually got from it though. It's still the same thing. It's like you still get more conversions by cold calling or doing anything else than just stuffing envelopes.
Oh yeah. Yeah,
Yeah.
that's right. Yeah.
So what else I was going to ask? There's a couple things. One slipped my mind, but I'll go to the next question. So you said you're actually buying these, right? Are you ever using some hard money loans, or is it just your own capital? How are you
It's my own capital.
financing?
It's my own capital. And partner, done a few of the larger ones on partners. Actually one of them was the biggest deal we've ever done so far. Was 650 acre property. Bought that with a partner, and they put up the funds, and I handled the whole marketing side, and then we bought it for $315, sold it for $595. That worked out great. Got another one right now that we just closed on a partner deal. It's similar numbers, 365 purchase price and anticipated 725-ish, something like that. So that one seems like a good one. And then I did a smaller one towards the beginning. I don't know, my first 20 deals or so, I guess. And that one I bought with a partner was only 40,000. But it was just a matter of I didn't have any at that point. I didn't have any partners lined up, and I was like, I should try this out. This would be a good one for that. And I had a lot of properties in the pipeline that I was buying, so I was like, this would be a good time to, because I didn't know how the cash flow was going to work. Like, was I going to get all these closings done in time before I needed to buy more and everything? So I did that one, and that worked out really well too. So two actually closed so far, and then one that we just purchased with the partner. And so it's mostly I like to self-fund everything ourselves, but those bigger deals, I think it definitely makes sense to bring on some partners, and can be a win-win.
Okay. Well, that comes back to what you said earlier about you plan on really need to sell it within 60 days. So part of that's dictated by the price point, but My point is that it's really about the velocity of your cash, because if you're waiting 3, 6 months or longer to sell something, then you obviously can't scale your business on that because
Yeah,
it's
it kills
locked
you.
up. Yeah.
Yep.
So how do you determine whether or not it's going to sell within 60 days? What's your approach?
Just try to price it at pretty, first of all, at this point, only focusing on properties which I kind of determine are good properties. I'm trying not to buy anything with any. I know enough now to know what's going to cause a problem on the resale, and I still, still buy properties that are not perfect, I guess. But I really have a good feel, I think, for what types of properties will sell pretty quickly, and then it's just about pricing them. We price them, you know, slightly below where the competition is, and that generally gets us a sale right away.
Okay,
So
even if it's
and then
a
I keep reducing. I keep reducing until if we're not getting the type of activity I thought, I'd keep reducing the price, even if we're not going to double our money or something like that. I just methodically kind of reduce it down every 2-3 weeks until we get our buyer. So
what's the decrease? Like $1,000, or is like X%?
oh no, like say for instance, it's kind of by feel in a way. And say for instance, the property is 99.9 we're listing it for. I'll take 10 grand off, every 2 weeks or so till we get there. But if you start, if it doesn't sell after a few of those reductions, then you're kind of getting like, well, all right, well, I'm not going to make much on this property, but I'd rather do that and just move on. Just start reinvest the money into something that I know is going to be a better deal. So if I'm really confident in it, like I know it's a good property, I know it's going to sell, for one reason or another, I won't go that aggressive on the price reductions. But we're not getting the kind of activity I want. I'm not emotionally tied to it anymore. It's just about finding that balance that's going to move it.
So is that why you had a couple deals they mentioned earlier that you made like a couple $100 on them?
Yeah, yeah. I just closed one yesterday. I think we made like 500 bucks on it, and I think I ended up selling it for like 27.9, and I think initially we listed it for like 59.9, and I just gradually kept reducing it down, and it we weren't getting the activity, so I knew that there was like no, that area. The In hindsight, I wouldn't have bought something in that area because I looked at it, afterwards. I was like, boy, this area is kind of dead. So I just wasn't the kind of activity that I like to see. So then I just had to, kind of reduce it until it just sold. So I'm fine with that. You know,
How long did that take to sell that one using this
uh,
approach?
longer than I wanted it to, maybe 4 to 5 months. You know, so it's not just the fact that I only made 500 on it. It's the fact that I held it for so long also. So it's kind of like hit me in two different ways. But I should have reduced that one faster than I did. Probably I let some of the reductions go longer than I normally would, but because we were getting kind of close to like where we, because my thing is I'm not gonna take a loss on any of these deals. So once I get to pretty close to where I need it to be, then I'm gonna slow down in those reductions. So
Right. Okay. Yeah, I just asked because I was obviously it's okay if you're kind of just scratching the trade, especially if you're flipping it really a lot faster. That way you can just get your initial purchase price out of there and put in something else, right?
right, yeah. Yeah,
Okay.
that's another reason I like doing a lot of properties just on my own because I call the shots on them. If you have a partner, they may want to, hang on for a little longer, try to get a higher price or something like that, depending on who the partner is. But it's just kind of like my philosophy. Like the winners are going to win, and then you've got some. You're not going to be perfect. You're going to have some properties that don't go the way you want them to, and then it's just best to move on from those ones, even if you're not going to make much money.
Yeah, that makes sense. I mean, it's just again part of just being more objective about it, analytical, and not emotionally attached to it, which is
Mhm.
not always easy. It's like, no, I was so determined. Like I got this buyer now, and it's under contract with the buyer, but they're just not closing. Already past the closing date, but it took like 6 months to find them, and it's just not that great of a deal. I mean, I'm making
Yeah.
like it's like a 20 $20,000 spread after commission, everything, whatever, it's like probably be $12,000 or something. And it's like,
Yeah.
that's at most, it's like maybe a 20% return over that long period of time. It's like,
Yeah, I
it was not
know.
worth it.
No, not worth it, you know. I mean, unfortunately, those ones are going to come up and they can't all
Yeah.
be home runs and everything, but you just you don't want to let those properties like get in the way of your progress. It's like obviously they're not going to do a lot for your, business, as a, a big win or something like that, but as long as they don't drag you down.
Yeah. Which actually reminds me, previously before I got into real estate, I was trying to trade options, and it's actually what motivated me to get into real estate because I lost so much money trading options, stock options.
It's a lot of leverage in those options.
Yeah, but um it was intriguing. But my point about that was that the idea was you wouldn't even buy the underlying stock, you would just be trading, naked options, and without having any like collateral to secure your position or whatever to offset it or hedge it. And the thing that I was taught through the literature, the education I was going through, was that I forget what it was. Like, oh, it was like, don't risk more than like 2% of your entire portfolio, because then you can do X number of trades and afford to, I think it was like 20 trades over this time period. So I just say all that because, do you ever look at purchase prices that way, where it's like, well, $100,000, or say I only have like 200,000 to invest, 100,000 is half of my entire funds. And if it doesn't work out, like we just said, where it takes like 6 months to sell or longer, obviously it's a really high concentration that could drag down my entire business. So do you ever look at purchase price as a percent of your entire funds, since you're self-funding everything?
Not really I don't calculate the percentage of our entire funds, but I do get more analytical with those type of properties, and I'm more conservative, and I want to be more sure on those deals, I guess you could say. So it's I probably, pass on some deals in that range sometimes where, it probably was a good deal, but I just wasn't kind of 100% sure. So I'm probably just more conservative. I think that's what it does for me in that range. But you can also make more on those type of properties too. So it's a trade-off for sure.
Yeah, maybe you could partner with someone or something. So I guess maybe part
Hmm.
of my problem is I don't want the deal to die. I want to try to figure out some way to make it happen. And it's just brute force pushing it through and trying to make
Yeah.
something work on it, which is good and bad.
Sometimes a deal's not a deal though. So if there's something that's not working right about, then you really have to think, if this is a great deal, then, you know, it would go much easier.
Yeah,
But
exactly. You wouldn't have to force a square
mhm,
peg through the round hole type of thing.
right.
So I guess
Yeah.
are you trying to stay within like 90 minutes within any major MSA throughout the entire country
For
to
the
be able to
most part,
send?
I think that's where our most success is for sure. Like sometimes we can go out farther than that and we do pretty well. But if we are going out further than that, I'd like to at least see that there's some activity, some good land deals happening. I don't like the markets obviously where there's a lot more inventory than sales. Like if I look at a year's worth of, you know, activity within a certain range, say 10 acres plus, and I look at a certain county and it says, okay, there's been 50 sales over the past year, and then I pull up the active inventory and there's 150 properties, then I know like that's not the kind of market I want to be in because it's, probably 3 years worth of inventory. But if I pull up the actives and then there's only, 10 or 15 properties, then I can see, all right, there's a lot happening here. There was 50 sales over the past 12 months. That's normally a pretty good indicator to me that like things are happening. And then for some reason, certain areas I've noticed, there's like this weird imbalance between what the buyers want to pay and what the sellers want to sell for. And then it's just hard to come up with deals in those certain areas. And it's because I just think that there's this disconnect, and the sellers want more than what the buyers are willing to pay. And so not a lot of deals happen, not a lot of transactions happen. So it's the same, it's a lot of land, it's just not a lot of things, not like an active market. Like some markets, like, okay, this is pretty well defined. Like on average, like, you may be able to get $3,000 an acre for, the average property is pretty average, but it's like well defined. Some areas not. There's just stuff all over the place, and very limited transactions is just tough.
Yeah, definitely. So that goes back to your example. So is 50 sold in last 12 months like your minimum amount, or do you want to see at least like 100, or what's your number?
Oh, it really, it's not even about the number. It's more about the ratio that I look at. You know, if there's like, if it's pretty evenly balanced, say like I pull up a county and there's 50 sales within in that range over the past year, and there's 50 properties for sale, that's kind of like, that's, I guess that would represent a year's worth of inventory, kind of ballparking it that way. But that's pretty balanced, I would say. I look for ones obviously that are better than that. There's more activity, like there's less, say there's 25 active listings that I can see, and then I see there's 50 sales that happened within that range over the last year. Then that's a good indication that's a relatively hot, or at least warm market right there. And so that's more of what I look for, like the activity level and the ratio, more than whatever absolute number, because these areas are all have different sizes and things like that as well.
Okay, well, and also if it's 10 acres and up, and each of these are selling for, I would assume over $100,000. It just depends, obviously, on each market. Sometimes 10 acres sells for like $50,000, depending on where you are.
Right.
But
Right.
It may. And my point is, like, the higher price point might result in fewer of those transactions, and like an absolute number value, versus all those
Right.
quarter acre lots. There's tons of those, tons of transactions, because on the lower end, obviously, people can
Yeah.
afford to do that.
Yeah. Yeah. I
Okay.
mean, I guess it's just, the big thing is activity. If there's deals happening, then I know that the good properties will sell if they're priced right.
Right. But in terms of like coming up with that average price per acre, are you using last 90 days?
Generally 6 months when I calculate that, past 6 months. Many of these areas, I mean, they haven't been that volatile as of late, but I'll look, I'll try to keep that in mind. If I sense that things are, starting to pull back some in certain markets, then I'll, just adjust my prices lower. That's one of the things I like about this business, is it's, the 60-day hold time, so I can adjust pretty rapidly. Like if I get the sense that a market is really starting to slow down or something like that, then I'll still buy, but it's just got to be cheaper than it was before. So when I was doing REO properties or bank owned properties back in the worst real estate crash ever, pretty much 2007 to 2009, there was still a ton of activity with bank owned properties. Like I would list a property and I would get 30 offers on it from investors. Like things were still happening. There was like still an active market. It's just the prices like completely reset. You know, they reset way down, but it just kind of reinforced into me that, I think we'd be fine in this land business, if the market continues to go down, and as long as we're adjusting our purchase prices. And we got to get more aggressive if we realize that the market is taking more of an aggressive path downward.
Yeah, I agree. I've been trying to factor in, depending on the size of the property, everything. I'll try to say like 10%. Like I might look at the comps and say, well, comparables, maybe they sold for $100,000, but I'm just going to say maybe we could sell this for 80,000, and then I'll discount off of that to get to my purchase price. And are you doing any of that at all too?
Yeah, a little bit. I don't try to set my values, I guess, like when I'm looking at an individual property and kind of fine tuning what we can buy it for or whatever. I don't anticipate ever that we're going to get full retail. It's more like a step below retail. And depending on what the market is, it might be 20%, it might be 10%, you know, it might be 10 grand, it's just kind of a feel almost in a way. And then I base my purchase price off of that. And I try to double it and, back off the commissions and stuff like that and whatever closing costs I've got on both sides. So, just kind of a back of the napkin type calculations, but this generally work best, and it allows me to make quick decisions. That's important too.
Okay, so then it's not necessarily a percent of retail value that you're always buying at. It's not always going to be, for example, I got to buy at 25% or 30% of retail, because you're doubling of that money. That percentage might change, like a sliding
Mhm.
scale. Is that correct?
Right. Right. Exactly. Yeah. So,
Okay.
yeah, I mean, I guess maybe there's better ways to do it and have kind of stricter criteria. But I really look at when it comes down to fine tuning things and we're actually working out the deal with a lead that had called in. I'm really trying to figure out, like, objectively look at it and say, retail on this property might be 100,000, but I know that, or I have a feeling at least that if I put it on there for 80,000, we're going to get a buyer. We're going to get a buyer right away. We can put it on 90,000, try to push it, but I'll generally base it off of that 80,000 and then back off commissions and back off closing costs and then try to do my double from there, figure out what that would be, my best purchase price could be. And sometimes if it's a really premium property or something like that, I'll push past that a little bit if I know I can still make money on it. But it's just a case by case basis, really.
Okay. Yeah, that makes a lot of sense. So one of the last questions here, maybe wrap it up, is conversion rate. So sending that amount of volume, 50,000 letters. Like, I know when I first started, like, I was told if I send 1 or 2,000 letters, I get at least one good deal. So out of 50,000 letters per month, how many, reasonable deals are you getting out of that?
Yeah, I mean, really, we lock up. I mean, we really lock up probably, you know, 15 to 20 at least, I'd say. But sometimes, we get title issues and things like that that don't make it to the finish line. So, um, generally, we're trying to hit at least, um, you know, 12 to 15 a month, trying to purchase that many. Sometimes it doesn't quite work out that way, but that's kind of where we're trying to be, I guess you could say. But I'm more like, I'm less like worried about like conversion rate and everything. And it really comes down to your list too. Like if you're sending like a really targeted list, like you're doing like only absentee owners, or out of state owners, and you're really kind of working your list down to super targeted list, you're gonna have like higher conversion rates. You're gonna make, you're gonna have, like, you'd be able to send out 1,000 letters and probably get a couple deals out of that. But if I would send out 1,000 letters, it probably, with the type of list that I build, I don't know if I'd get, most likely I wouldn't get one deal out of that. So,
Yeah, yeah, I understand. I do the same thing. I put pretty minimal filters on there. I know some people use the amount of years of ownership though. Do you ever apply that? Like, has to be owned for at
used
least
to.
2 years? Okay, not anymore
I
though.
have experimented with that. I always thought that was maybe a little bit unreliable because sometimes, there's a family transfer or something, and I wasn't sure if that, maybe in certain areas that does take that into account, and um, doesn't kick those people out or whatever. But I didn't want to miss those people where they inherited the property or it got transferred to them for some reason, and then those people wanted to sell. So I always thought about that in my back of my head. It's like, I don't know if I want to exclude those people. So,
Yeah, it's funny you mentioned that. I was talking with another late investor friend, and it's exactly what happened. He
mm,
he just like forgot to put the filter on, or just, I don't know, maybe intentionally didn't put that filter on, and found a woman that had just inherited something. So he
yeah.
got a good deal out of it. Yeah.
Yeah, definitely. And some of those inherited ones are really the best because, these people end up with these properties, they live nowhere close to there, and they're just like, what do I do with this? It's more of a liability to them because they're like, well, how do I secure this property? I got to get signs up, and like, it's just, and they got to pay the property taxes. It just doesn't make sense for them to own that property.
Yeah, exactly. Especially if it's in an HOA, and then you got
Oh,
other
yeah.
issues. Like, first starting with the dues, but then, oh, if you want to sell it, then you got restrictions and not as easy to sell. How often do you run into HOAs dealing with these larger
I
parcels?
try to stay away from them. I've done a couple within HOAs and they all take longer to sell. And I knew that from my other days in selling properties and just general residential properties. Those properties are generally harder to sell if they're in a gated community. or some sort of really restrictive HOA. I mean, some people are looking for that, but you get less of a buyer pool. People can't drive by it easily a lot of times, or they're just really scared off by a super, in your face type HOA. So I don't, the couple ones that I have had, they've taken longer to sell. So I'm just generally pretty much staying away from them right now.
Okay. Yeah, that's really wise. I actually have 2 lots in HOAs and just hoping I can get out of them.
Yeah, I know.
Yeah.
They're just a hassle, they're generally.
Yeah. I was actually looking at one, there's like 0 houses for sale. And I was talking to a realtor and she's like, yeah, the last one I listed, the only reason it was listed was because the person was going to an assisted living facility. But most of the time people move here, they don't leave. And I was like, all right, so maybe the inventory would be snatched up. So then it's like, what could I build it for? But it's also like, how long is it going to take to build? And it just starts to go down a whole other rabbit hole,
Yeah, there's more due diligence steps for a potential buyer. There's generally more closing costs because you've got to pay, for these HOA docs, and just more hurdles to go through. Even access sometimes, if you send a photographer out to the property, you got to coordinate access for them. It's just, just a pain.
Yeah. Yeah, definitely. Have you ever considered building on any of your properties though and forcing value that way?
Yeah, I mean, there was one property that was going to develop into a mini home community.
Okay.
And I had it on the market at the same time, and then I ended up finding a buyer for it, before I got too far in the process. But I was going to do that. I do want to do something like that at some point, create an income property off of one of these, one of the right land properties that I've got. But so far, I have not.
Okay, cool. Yeah, I'm actually working on 140 acres in
Wow.
Texas, and it'd be split into 39 lots because the county requires 2.5 acre minimum. And I'm just waiting on, we're just finalizing the contract on it, but it could potentially be like a good build to rent barn dominium community or something. We can always talk about it later if you're
That's
interested
cool.
in
Yeah.
exploring it.
Interesting. Yeah.
Yeah, otherwise it could just be like a simple subdivide and flip type deal, but just a matter of how long it's going to take to sell through the inventory. So I don't know, it might be a couple
Yeah.
years, but might work out
Yeah.
if we raise capital on that.
Yeah. That's cool.
Yeah. But yeah, maybe that's part of my problem too, is I start to think of these big ideas and raising capital and trying to go more like multifamily syndication route, whereas you're probably making a lot more money in a lot shorter amount of time by just doing your business.
Well, I'm an entrepreneur, so in the past I've had many entrepreneurs, they have the shiny object syndrome, where it's like kind of like, oh, I see these different things and it all sounds so exciting to work on all these different projects and everything, but really I've come, recently over the past few years or whatever, I've realized that it's about extreme focus, taking one business model and then just focusing on it, doing it over and over again, and trying to build the best possible business that you can. I mean, if you spend your time I mean, there's lots of different business models and there's lots of different ways to make money, but it's about picking one thing and then just really trying to scale it up as high as you can go. Unless you're at the point where you can't scale any higher for one reason or another. But I believe that there's a lot of ways to scale the land business, and I think I'm nowhere close to where it should be, or where I could scale it to. So I'm just focusing on that right now, and just been trying to get it as big as I can.
Okay. So I guess I'm just thinking, what if someone had a limited budget, say 100,000 to invest? Maybe I already know the answer to it, but what would you recommend they do to continue growing their business? Like,
Yeah, a land
as fast as
investor or
possible.
just
Land investor, just a land investor.
Mm-hmm. Yeah, I mean, I would definitely put all my money into mail and keep a very consistent schedule with that, like plan it out in the ahead and kind of identify any sort of, or it doesn't have to be mail, it could be text, it could be anything that people are using to generate those deals, but it's got to be consistent, and it's got to be like clockwork. Like, that's your non-negotiable. It has to be, say you commit to sending out 25,000 pieces of mail a month. I mean, it's got to go out. Like there's no ways around it. It goes out. Like, you want your business to succeed, like that's what has to happen. So I would commit my capital to that. And if you don't have the capital to put into additional deals as they come in, then there's so many funding partners in this business that you could partner with on these deals, as long as it's a real deal. I mean, you're not going to have any problem finding the money. So obviously you're not going to make as big of a profit if you take on a funding partner, but if finding those deals is really the engine to everything, and it's going to allow you to grow. So, and
Okay.
if you've identified some sort of bottleneck, like, hey, I have a hard time putting the list together, or I don't like pulling the things from data tree, or I don't like doing this part or whatever, then you bring someone onto your team that is responsible for specifically that. Like, you film a Loom video showing them exactly what to do, and you tell them that if they have any questions, obviously ask you, and you work with them until they get that. But even if they watch the video 5 times, as long as you're clear in the video, like what you need them to do, they'll get it, as long as you're hiring people which you believe are really good for your team. I mean, that's the other thing, that like anyone that you take on, like, put the effort into finding like really good team members, because that'll pay off. Don't just settle for, my wife's sister, my wife's sister's son's friend or whatever needs a job, like, don't do those type of things. You got to like be real targeted, and like, get on Zoom calls and interview these people and see how they are, and if they match with your culture, and if you really think they're going to be a good fit for your team. But if you get good people, then everything else gets super easy. So,
Okay. Do you use that predictive index? What's it called? Predictive index something to screen candidates?
no. But I just
Okay.
go by feel. I first of all, I do a couple little tricks. So, normally, like, if I'm hiring for a position that's, going to be, in the United States or something, then I'll generally look for post something on Indeed. And one of the things I always do, and this really helps me filter out things, is I always say, write a cover letter and let me know why you think you'd be a good fit for the position. And it's amazing how many people won't take that extra step to like write that cover letter. And it's just kind of a non-negotiable for me. If they don't write a cover letter, it means that they're showing no extra effort, and they're not going to go that extra mile. And I just immediately, disqualify them. And then the ones that write a good cover letter and their resume matches up and everything like that, then I'll schedule a Zoom call and talk to them, see if I feel like it's a good personality fit, and kind of ask them some questions, which I think will determine if they're a good fit. And then, just go with the best candidate. And if it's not working right away, then you just move on from them as quickly as possible.
Okay. Are you primarily hiring folks in overseas or in the US?
I have a few that are overseas for the more administrative, behind the scenes type stuff, but I've got 3 that are in the US, and one's in Canada as well. But so that are, the US based staff, I guess you could say. So,
Okay. So that's like your lead manager, acquisition manager, those
acquisition
types of roles.
manager, analyst, and my transaction manager are all, US or Canada.
Okay.
Yeah.
Interesting.
Yeah.
And then overseas is usually like Filipino VAs.
Yeah. And I've got another person on my team from Pakistan, and they're all excellent, and they do a great job for us. So just try to match people, with what their skill sets are as well. Like, certain people are good at, certain types of tasks or jobs, and then I just try to keep those things in their wheelhouse, I guess. So,
Yeah, definitely. I think it's important to understand, are you like more of a data person looking to remain in Excel, or do you want to get on the phones and interact with people? Definitely worlds apart, these different types
yeah.
of aptitudes and skill sets. Yeah.
Yeah, for sure.
Okay. So in terms of folks you're looking to get in touch with, are you looking for more investors, like passive investors or active investors, or what are you looking for? Like, who would you want to reach out to you?
Yeah, I mean, obviously, anyone that is interested in partnering on deals, especially some of the larger deals, I think that could be some win-wins. I think there's, I'd love to find some more people to work with on things like that. I've got, if anyone's interested in kind of following my journey as far as what I'm doing in the land business, I've got a website up, which is called turningprofit.com. We're going to be doing a podcast with myself and my wife about real estate investing and trying to, going into in depth in a lot of different investing models. But on that site, I've got monthly income reports that each month I break down like how much revenue we took in, what are the deals that we resold that month, how much profit we made, how many days on market, return on investment, all these different things. And I just kind of break down how that month went and try to analyze, what went well with the deals, what didn't go well, and everything in between. So, I'm creating it to try to be as insightful as possible and, maybe help some people along the way. Because when I started this land business, it was kind of like there wasn't a lot of stuff like that out there. Like I would hear people saying, "Oh, I bought this property for 10,000, I sold it for 30,000." And I believed them, I guess, but I didn't know for sure that that was true, and I didn't really even know it was possible. Like, you know, until I started doing it myself, and then I knew firsthand that it actually worked. But maybe this will give a little bit more insight into what types of deals and things are possible.
Oh yeah, tremendously. It sounds really helpful. I'm definitely interested in checking that out. And it's funny you mentioned that because I see people posting checks on Facebook like, oh, $8,000 check or
Yeah,
60,000 bucks, and it's like, is that profit or how much profit you make? Because
yeah,
if you
yeah.
bought
What's
it,
the
then it
real
might
deal?
be $5,000 profit.
I know, I know. So I break all that down. Like this is the actual wire amount that I received after all was said and done, after the commissions and closing costs and everything. Here's the wire that I sent out. So it's easily, and obviously those figures don't include like overhead of my team, which is another, other expenses and things. But I also say how much mail I sent out that month. So you can calculate how much that costs and things like that. So just try to be as insightful as possible. So
All right. Yeah, that's great. So we got the website, turningprofit.com. Is there an email or anything else you want to leave folks if they
yeah,
want to
you
get in
could
touch with you?
Reese at turningprofit.com. So that's a great way to get a hold of me. And yeah, I'd love to hear from you if you're at all interested in, maybe partnering on some of these land deals.
All right, perfect. Yeah, I'll put that in the show notes, and it's Reese, it's Reese at
Yep,
turningprofit.com.
that's it. Yep.
All right, fantastic. Well, thanks a lot, Pete. I know I've learned a ton here. Honestly, we might have to charge just for this episode because I think we've added too much value.
Well, no, you're a very good interviewer. You asked me a lot of questions I've never heard before, but it's all good stuff. I love it. It's hopefully everyone that listened got something good out of it. Maybe in just one little thing. So
Oh, absolutely, yeah. And it's again, like I said at the beginning of the show, like I definitely hope to get more and more land investing folks on here. I love speaking with other folks as well. It's really interesting stuff, but obviously this is my wheelhouse, so I can ask a lot more interesting questions.
yeah, yeah. You know what questions to ask for sure.
Yeah. All right, good stuff. Well, thanks a lot and hope to do
Thank
it
you,
again
Mason.
soon. Sure.
Yeah, I really appreciate it.
All right, that's another episode of Scalable Real Estate Investing. Thank you for tuning in. Please be sure to leave a review and subscribe on whatever channel you're using to listen or watch these episodes. And also be sure to go to scalablerealestateinvesting.com, scroll to the bottom, and fill out the form to sign up for our email. And you could also reach me directly at mason@scalablerealestateinvesting.com. That's MASON at scalablerealestateinvesting.com. If you'd like to get in touch with me to either partner on deals or even be considered to do your own episode on this podcast. Thanks again, and have a great day.